All right, everybody. Good afternoon. Good morning. Thanks so much for being with me here today. My name is Herve Francois. I am the acquisition manager of the Derosa Group, headed by Matt Faircloth. I'm so excited for you guys to be with me here today. In a nutshell, as the acquisition manager, I have been tasked really to go out and tackle which markets, which properties are really going to fit in our kind of nutshell of multifamily markets that we would like to invest in. And I've been doing it with the Derosa Group for about a year and a half right now. It's been great. It's been exciting. As you guys probably know, we just recently closed on a 336 unit apartment complex in Winston-Salem, North Carolina. We were just there last week, open house, taking some of our investors through. We got 82 investors in on this deal. We had about 10 of them last week, and we were walking through the property, showing them how their money is at work, doing the renovations, doing the value add for this property. So real pumped up and excited. And we've got more forthcoming on that, particularly a webinar next week to give our investors and new investors an update about that property. So like I said, I'm real excited for you guys to be with me here today as kicking off the inaugural show, Market Hunter Thursdays with Herve. I'm sure you noticed the rhyme, Thursdays with Herve there. We're pumped up. The first city that we're talking about today is Lexington, Kentucky. As a lot of you know, it is a city where we currently own two large multifamily assets, one called CKNW, Cross Keys and Woodbridge, and the second one called the Preakness. We are traveling to Lexington, Kentucky today, and just some, tidbits of Lexington, Kentucky, just off the top of my head. So Lexington specifically has a population of 328,000. You got a median income of folks over there of $50,000. It's home to headquarters of several large companies, including Valvoline, A&W restaurants known for their A&W root beer. They got the Toyota manufacturing plant over there, Tempur-Pedic, Sleep Outfitters, and so on and so forth. And of course, the University of Kentucky Wildcats, which is a large employer in the city of Lexington. So I'm real excited today to have on one of our guest speaker today is a gentleman by the name of Brandon Cutright. Brandon is the president of Silvestri Real Estate. They are a commercial broker based in Lexington, Kentucky. They know everything Lexington, I think even more than just real estate, if you know what I mean. They were instrumental in having us in with our purchase of Cross Keys and Woodbridge, as well as Preakness. So without further ado, I'm going to bring on my man, Brandon Cutright, so we can go ahead and get started today. Brandon, you there?
I am. Good afternoon. How are you?
Yes, good afternoon, man. Thanks so much for being my first guest speaker on our inaugural show, Market Hunter Thursday with Herve. I'm pumped. As many of you guys may know or may not know that Brandon and Brandon with the Derosa Group, we got a lot of history. We've been down to Lexington several times. Brandon and his team, Ken Silvestri and the rest of the guys have always shown us a great time in Lexington. We wanted to start off, Brandon, with Lexington as the first city I was going to discuss on this show, because there's so many exciting things going on in Lexington. And I think so many investors, a lot of times they focus on these tier one cities around the country with good reason, but we don't want to ignore these secondary and tertiary cities. I put Lexington in secondary, 350,000 population, just about, definitely fits that category. But, I want to get in it, to you. Let's go ahead and dive right in. Why, specifically Lexington, why are folks really interested in investing in multifamily in Lexington? What were some of the signs that you have seen, or you had seen maybe a few years ago, that told yourself, hey, listen, this is going to be a real exciting market to invest in?
Sure. Well, first, thanks for having me. Glad to be the first guest.
Yeah.
I'll give a quick background because that'll help with the answer to that one.
Sure.
Graduated from UK in 2010, so I'm a Lexington homer.
Okay.
And I always wanted to be a real estate investor myself, but it's kind of tough to graduate and go straight into that. So I hopped on the management side for 5 years for public and private companies. So I worked for a large REIT, and then left them in 2015 to join with Ken It was a smaller team at the time at Silvestri Real Estate. So my knowledge on the brokerage side is from 2015 until now. So the first couple of years was really just drinking from a water hose. It was just 16, 17 was insane record years. And I think what hit me with the market was in 2018, if people remember, we started to have some interest rate increases. And you'll see that when you're trying to buy properties or broker properties. You'll see if it's a loan assumption from 2018, there was that spell where they're creeping in mid to high fours, depending on the debt. And so we thought, well, that may hurt Lexington. And it didn't. I mean, it didn't. I think so. That was my first sign of kind of how bulletproof Lexington is. And I think that's because, one, there was still a good amount of value add. And so when you're doing a value add asset, as you guys know, you're the kings of that. It's not always, you got to take into consideration the refinance loan amount, but it's easier to build that in than just coupon clipping. And so with Lexington, I think what helps with that is, that one, you can do the value add. Two, no, after the value add's completed, we don't have 10% organic rent growth, but it's very rare that we have none. It's just a solid, steady 3% a year. Population growth is steady. We have great employers. Everybody you mentioned, plus there's even some smaller subsidiaries, Tiffany's and Company, Amazon Fulfillment. So there's just tons there. Lexington is the 11th city in the nation with residents with a bachelor's degree or higher. So a lot of people don't think about that when they think of Kentucky.
Yes.
Lexington. And so that's when I was realizing, like, okay, the stuff that maybe seems boring, just kind of that slow and steady, is also why we don't see the really big dips, even when the interest rates went up a couple years ago. And so now they're, of course, back down, and we're at, this could be a record year, even more than 16, 17. So, there you go.
Yeah, no, that's interesting. What, with a lot of the investing that has taken place in multifamily, what would you say of the competitive landscape from an investor standpoint? I mean, are there still a lot of good opportunities, or would you say a lot of the low-hanging fruit has already been picked in Lexington?
Lexington is getting tough. So I would say the C-class value add is tough. I mean, we've traded probably, I kid you not, probably 2,500 units, 3,000 units of that in the past 4 or 5 years. Our total is about 6,000 units since I've been with Ken. And so if I would narrow that down, I would say half could be considered C-class value add, some properties multiple times. So luckily what we're seeing, though, is a lot of people have done it right. So it went through a spell where the market was so good that someone would buy it, not really do much, and then sell it 2 years later. Now people are putting in the money, they're stabilizing it, and then either refinancing or selling. So we've got an interesting few years coming up because, 3 years ago, everybody wanted the value add. So that's everything that was in Lexington. Well, now we're starting to see some post value add come to the market. And so that's going to be a different buyer. We're selling some more to the New York groups and the California groups and the bigger funds because they can usually handle the post value add. And then even in the B class, it's very tight. There's a group of local owners that's still popular in Lexington that between 3 or 4 people probably own 3,000 units.
Wow.
Maybe 3,500. If those ever hit the market, those would be great value add. The rest of them are same thing. They're B value add that's already been flipped. And so it'll be interesting to see when those hit the market, when we have multiples north of 100 a door. It continues to happen. So Lexington's tough. It is right now.
Is it something, though, for Brandon, that could this be an area of potential concern as a lot of that value add moves up the scale to B market when you start considering from a median income perspective of folks that are living in Lexington and affordability of what most likely is going to become, more expensive rents, the properties that are going to start trading over the next couple of years?
I don't think so too much. I think there's still some insurance there, I guess you would say. And so I don't have the number in front of me, and I think you mentioned it, but the median income in Lexington is pretty solid. And so if you look at the average tenant or renter, and most properties use a 3 times multiple. So you can pay 1/3 of your income in your rent. And so I think the C class that's moving to the B, when they're still in that $700-800 for a 1-bedroom, even $1,000 for a 2-bedroom. Take that times 3 times 12. You only have to make $36,000 a year to afford that. So I think that's a really good niche.
Right.
The concern is maybe more with the B trying to move up to the A. So we've probably had about 2,500 new construction units since 2015 or so. And some by local builders, some by big developers. The Henry was a property that's over 206,000 a unit. So just a different animal for Lexington.
Sure.
So the question we'll see is when the B value add is really trying to push that, $1,200 for a 1-bedroom versus you can go to one of these new properties for the same price. Does Lexington have enough people in that income range to support it? I'm not sure.
Right.
I think there's still some room for that C to B value add to have plenty of prospects.
Right. So would it be that much for the tenants? Would it be that much more value compelling for them to potentially get one of those B properties that might have been, scaled up, repositioned as an A versus a new build? I got to imagine the new builds, the new constructs are still going to be coming in with a higher rent relative to a B that's been repositioned up towards an A.
Yeah, it is. Yeah, you're right. There's definitely still a gap. And I of course picked out the most expensive one, but we can work our way down and
right.
So I think, yes, there's still hopefully a big enough delta there, but that delta is closer than your space of more C to B. That seems really strong. Tons of tenants. But you're thinking if let's just say a perfect example, I feel like when the A property started coming to town, $1,000 for a 1-bedroom was the mark.
Right.
So that was just that's what you wanted to get. Well, let's say you buy a B property for $60,000 a unit and you want to, and there's been a few of these, you want to put $20,000 in it, completely try to make it an A.
Right.
What do you have to rent for? Are you at $950? And then the question is that delta between that and $1,000, is that enough? And we're watching that. Everybody's been doing great so far. Population growth is still there.
Right.
We haven't seen any issues with that.
Right.
That makes me more nervous relative to B to C.
If you were to kind of size up Lexington as a market for investors, when investors choose not to invest in Lexington for whatever reason, who is Lexington's competitor for investors in multifamily? If so to speak, if you think of it in that manner.
Yeah, that's a good question. So, as you mentioned, Lexington has about 350,000 people. If you brought out to Georgetown, Nicholasville, the whole MSA is about 500,000. And our kind of sister city to the west is Louisville, and they have right about 1.2, 1.3 MSA.
Right. And
so I feel like we're at that line where Nashville is obviously exploding.
Yeah.
So a lot of times they may look at Knoxville. I think it's a big competitor of Lexington. That's kind of a, University of Tennessee's there. It's a similar kind of build. I think Athens, Georgia. That's a smaller city, but the University of Georgia's there.
Yeah.
Very similar to Lexington. I think the advantage we have is the location. And it's funny, my house is exactly 1 mile from the 75-64 where they intersect.
Okay.
And so that's why a lot of regional hubs are around here, between here and Louisville, because you're so close to, like I said, it takes me 2 minutes to get to 75 or 64.
Right.
You can be down to Atlanta in less than 6 hours. You can be up to Chicago in less than 6 hours. Indy, Columbus is 3. And so I feel like that's what we usually get. It's someone from out of town that started with Columbus, Indianapolis, Nashville. Then they move to maybe Knoxville, Louisville. And then if you've already got a presence, they start looking at Lexington and realize how great it is. And then add some units here to balance out with the kind of within a 3-6 hour radius.
Right. And enlighten our investors. There's something about Lexington in regards, you don't think of the city as, a dartboard, right? Where Lexington is the middle, and then you have it surrounded by horse farms, obviously Kentucky, right? State of farms. And so is it still that there is, I guess, ordinances that you can't go ahead and build too much or expand too much outside the city of Lexington, because these horse farms are deeded where they can't go ahead and take in any construction.
That's definitely right. So when I mentioned it sounded like a large number of units, but when you really think about that, that's been over 5 years of construction. So
Okay.
it's really small compared to Louisville or Cincinnati, where they can go really outwards. So with Lexington, it's tough, and we want to see as much development, but it's going to mainly have to be infill. So people are just grabbing whatever infill land they can, because you're right. I don't see, if you drive past Man of War and right at that, what we call the urban service boundary, you can see right when the horse farms start. And depending on which side of town, there's a nice 10-mile or so gap between Fayette County and the next county, whether it's Clark or Scott or Bourbon or Jessamine. So you can easily see when it stops, and that's what helps Lexington stay strong versus Louisville. Great city, we do a lot there, but they are able to really go east and west,
right,
tremendously more than us, and that's just what makes Lexington beautiful. There's a lot of money in the horses.
Sure.
I don't see that changing. I could see maybe if it's some core, I don't want to say core, but maybe infill, I could see some zone changes, and maybe even downtown getting a little bit more vertical to meet the housing needs. But do I ever see taking up too much of those horse farms? Probably not in my lifetime.
Gotcha. Yeah. Listen, for our investors, and as you know, we have a lot of investors that, just getting their feet wet into multifamily investing. Others have been doing it for a while. However, they may not currently be investing in Lexington. They may have interest in investing in Lexington. What tips, what advice can you give them if they want to say, hey, listen, you know what? Lexington definitely is a market that I like to pursue. How would you recommend they kind of put their first foot forward?
Sure. So we're always happy for people to reach out. I think the biggest thing I always tell someone I'm talking to a new buyer is, what is the differentiator? And so we have a ton of buyers in our database, but we always try to figure out what separates the top from the ones that don't perform. So, if someone emailed us today and said, hey, I want 200 plus units built in 2000, value add at a 7 cap.
Right.
Everybody wants that. Right.
Right.
And so I think someone who can give us some information about them, their ability to close, and willing to learn, and just kind of keep up with us. Follow up is huge. You guys are great at that. Yep. Your ability to close is what's been big, because then you get first look at everything. Right. So I think building the relationship is the biggest, is just keep it going. So stand out, and then how to stand out, and then build the relationship. Because, if you email me today and say, hey, what off market deals do you have?
Yeah. Oh, trust me.
You're 20th.
Right. Stay alive, and don't take it personally if I don't return your phone call.
That's right. You are close another. And so that's why you get the calls. So that's how it works. So just stay in touch, separate yourself. And there will be a time where there could be the right deal for the right person. And once that closes, then you're moved up on the VIP list.
Got you. All right. VIP is where we want to get to, man. You know what I mean? Right. A lot of perks when you get to the VIP list,
That's right.
Perks is just return phone calls. I mean, that's
a big one.
Things in life, right?
No doubt.
Brandon, let me ask you this. I mean, as you know, so we have about 140 subscribers here on our Derosa Insiders channel, and we have 27,000 subscribers on our Derosa Group YouTube channel. What can we do for you to help out Brandon and help out the Silvestri team in doing what you guys do on a daily basis? We want to return the favor for all the help that you've given us in the past, and obviously being my guest speaker on my inaugural show. What can we do for you? How can we help?
That's a great question. I appreciate that. So for us, I'll go back to the relationship. We don't look. There's times where confidentiality is signed. So we never want anyone to necessarily cross that, but we see ourselves as local experts. And so we want to build that with your team. And so instead of just, all right, here's this listing and let me look at it and talk about that. Feel free to call us if you're looking at another deal. Even if we're not representing you, we can talk about that. We can talk about the market. If you've been talking directly with a seller and maybe it's not a deal for somebody in your group, but it could be a deal for another, you can come to us and we can help you kind of figure that out. That's a mutual win-win.
Mm-hmm.
And so I always tell people and this sounds like more us helping you, but it's really the reverse. It's just chatting about the market, what you're seeing, what's out there, what you're looking for, what you passed on. Because you never know. I mean, that's pretty big. And I would expand that out to, we know Lexington unbelievably well, but we're doing a lot of more business in Louisville and all of Central Kentucky. So I would say for that entire area, that would probably be the biggest help for us, is just keeping our pulse on the market, keeping us at the top. And, as much as if you need an HVAC contractor, you can call me.
Got you.
And,
all right.
Mutually beneficial. Like I said, so if you've got a deal, maybe it doesn't work for you. If you're, hey, what do you think about this location?
Right.
We can all win, and we help you and you help us.
Perfect. Let me ask you this, because we had an investor on our show, Derosa Insiders, on Monday, and one of the questions he asked me is, "Hey, Herve, how can I get in front of commercial brokers? It's so competitive. Sometimes I call them, they don't answer. I send them emails." And you've heard that all before. One of the responses that I gave him, and I like to get your opinion on my response to him, was, "Hey, listen, don't just pick up the phone and call, leave a voicemail. Don't just send an email, walk away, and you get disappointed if he or she doesn't get back to you. Put a packet together. Do a little bit of homework. Do some homework on the market. Do some homework on the properties that you may be interested in purchasing. Put a packet together, kind of like an offering memorandum that you guys do, right? But put a little packet together and really identify to those brokers the particular property that you might be invested in purchasing. Even if you put some of the comps around, even if you were to get, some of the numbers out there, there's just stuff obviously available on LoopNet. There's a lot of obviously, on the internet, public information where they can give you a bracket of a price range that they would be interested in purchasing that particular property based on what the comps might be trading at, and so on and so forth. And then obviously do what they can to get on the plane and come down and take out Brandon for a cold one, right? So, I gotta go one more way. So what do you think of that as a piece of recommendation to an investor wanting to connect with a broker such as you in order to get started and build and develop that relationship that you were just talking about?
I mean, that's huge. That's spot on. You got to differentiate yourself. So if I'm starting with, the worst thing you can do is email a broker you never met and say, "Hey, my name is Brandon. What off-market deals do you have?"
Exactly. Yeah. Go to the best.
Exactly that. Now, I know COVID's made it a little bit tough, but in general times, when I think about the groups that we've done, a lot of deals with, that's it. They come to town, they present themselves well, they pitch what they can do. We do go out for drinks,
right?
It is building that. So I think that's everything. And then once you get the first deal sent to you, whether it's off market or on market by this broker that you built this relationship with,
right?
Quick feedback and a discussion on your underwriting is huge. Because that's my specialty. That I love the numbers. And so once we kind of learn how each other underwrite, it's funny how most deals we're right at the same thing.
Yeah.
That's too low for the seller, then maybe the deal doesn't happen. But then we kind of get a vibe for, okay, this is what the Derosa group likes.
Yeah.
Herve is going to underwrite like this. I get it. And so it would start with, like you said, your package. You're picking out what deals you like. And if it's especially in Lexington, as soon as you tell us a deal, we're going to know what type of buyer you are.
Right.
And then from there, going more deep, get you off market numbers, T12 rent roll. What questions do you ask? What's your hot buttons? What's your return hurdles? Because then we do a lot of deals with people where it's like, okay, this group needs a mid-teens IRR, but they also need an 8% cash on cash up front. Okay, that's fine. I can quickly underwrite that and say, that's not for them.
Right.
But I didn't get that unless you, one, hopefully came to town with your package, built a relationship, and then two, underwrote it pretty quickly when you do get a deal, and then give me some feedback. And then eventually one will hit. And that's
That's some great helpful tips, man. That's some real grateful, helpful tips because, again, it is a common question that we are always getting from our investors. Hey, how do you guys get started? I've tried this. It didn't work. What can you recommend to me? So those pointers, man, those so-called pro tips is great advice for our listeners. I really appreciate that, man. Listen, we're coming towards the end here, but I want to continue to end on a really good note here. Now, obviously, besides Lexington being known for their multifamily investing, they're also known for being the bourbon capital of the world. Brandon, I'm going to hold your feet to the fire. You have to choose your favorite, my man. What is your favorite pour down there?
So I'm a bourbon guy.
Okay.
I like bourbon neat.
Bourbon. Okay.
So I don't do any ice. I'll sometimes do an old fashioned, but I don't do ice if I'm drinking just bourbon.
Right.
My favorite, and this is kind of cheating, it's technically a whiskey. It's a rye whiskey. Is Thomas H. Handy.
Thomas H. Handy. I'm going to write this down. Hold on a minute. Thomas H. Handy.
That's right.
Mike, give me some today.
There you go. Now, I'm going to warn you.
Sounds right. You know what I'm saying?
Yeah, it's a Buffalo Trace BTAC, so it's released once a year.
Okay.
You got to win a lottery to get it. Yeah, it's up there with the Pappies, I guess is what I would say.
Got you.
But there's a lot of bars around here. It's not
you have a favorite one? You got a favorite bar, favorite restaurant?
I'll give a shout out probably to Carson's.
Okay.
I know we went there.
We did go to Cameron. We had a good time at Carson's.
That's right. Carson's very good, locally owned. And then I'll give 2 more quick shout outs. There's Malone's. So that group is all owned locally, Malone's, Drake's.
Okay.
And then we have a new tower downtown, office, housing, condos, 2 hotels. It unfortunately opened right before COVID, but working on it for 8 years. Wow. And they've got an unbelievable Italian restaurant called Italic's just opened on the first floor. And then on the top floor, they have Infinity Sky Bar. So that's the 3. All of those are locally owned.
Okay. Real
estate people here in town that do great restaurants.
All right. Listen, I have a feeling my main man, Justin Fraser, is listening in on us. So, Justin, don't worry. I know you with the kids today. I wrote down the name of these restaurants. So the next time we go, I'm going to find a reason to tag along with Justin and go down to Lexington. We'll be there. We will stop by to see you, but we're also going to stop by some of these joints here that you just talked about.
You should. Yeah.
Sounds real tasty. Any fun facts of Lexington?
Well, in Kentucky, they say that there are more barrels of bourbon than people. And Lexington is home to about, I think it was either 40 or 50,000 horses. And we have the best basketball program of all time.
There we go. I mean, you just got to leave it right there. And we know you got, hey, I didn't know not only your guys' #1 basketball fan, Ashley Judd, there, but George Clooney calls Lexington his hometown. I did not know that.
That's right. Yeah. That's a big claim to fame.
Yeah, there we go. Hey, listen, Brandon, this has been great, man. I can't thank you enough for being here. First, guest speaker on our inaugural show here, Market Hunter Thursdays with Herve. This has been great. I just want to remind our listeners that this show will show up on the Derosa Group YouTube channel a week from today. So if you didn't get a chance to listen in today, then please tune in next week. And as well, a week from today, we're going to have another live show. We're going to be traveling with this show, not physically, but we're traveling with this show to Anchorage, Alaska. So we're going to be having a conversation with a real estate investor, multifamily investor, with all knowings of about Anchorage, Alaska. So, hey, again, Brandon, thank you so much. Best to your team out there. I wish you guys all the luck to finish up strong for the remainder of this year.
No, it was my pleasure. It was a real honor to be the first guest on here, and I'm always glad to chat with you guys. I see my contact info down there. So yes, if anybody wants to chat, reach out, and we'll be glad to help.
Absolutely. All right, my man. Thank you again. Have a great day. Stay safe.